Hey guys, today's Tuesday. I took one long today, which was actually a winner. You can see right here. Basically, actually quite clean trading day. We had also high impact news at 8:30, and as always, we make a really quick trade breakdown. So we start on a daily. Let's just remove the executions. What we have is actually a really low volume day today, so not really a high or huge expansion on the daily chart. Only swept yesterday's daily buys liquidity. That's basically it. So nothing to say more there. So basically, if we drop down to the hourly chart, we have actually a really clean market maker buy model being in play in here. So we have consolidation, manipulation with 9 a.m. and then basically distribution higher. So targeting the buys liquidity right here of yesterday. So that's basically it for the hourly chart. Let's drop to a 50-minute chart. We can see that we swept New York open kill zone sales liquidity, also the sales liquidity right here, and from there on then just traded higher, swept the New York open kill zone buy side liquidity and the daily buy side liquidity, and after we did that, basically we just consolidated within the or inside the opening prices. So we want to be done after the 10 AM macro, because that's the low resistance liquidity run. We can see that also on the 1-minute chart right here. Basically, after we scrapped our daily liquidity, we only really slowly retraced back to the opening prices, and nothing we want to trade in here. So that's why I really want to be done also after we traded the low resistance liquidity run. So especially or more because I want to be done with trading after I made money. Why? Because I think if you lose after you made money, that's really damaging your capital, your mental capital. So really difficult that you then don't overtrade, don't over leverage. So definitely want to stay away from that. So that's the first reason. And the second reason, if you also anticipated the low resistance liquidity run, in that case, basically you are trading aligned with the higher time frame. We met the objective on the higher time frame as well, and from there you don't want to trade as well, because then basically there will not really be a significant move to chase. Lots of SMTs being in play in here. So the market maker buy model aligned with the higher time frame is also a smart money. So it's not only a smart money reversal, but also definitely a lower time frame market maker buy model within a higher time frame market maker buy model. In that case, we are really having a low resistance liquidity run, and we are able to even expand above our external targets. So we entered basically inside the 10 AM macro, so perfect entry in that case. And she definitely really aggressive, not even being able to close inside the inversion fair gap, only wicking into it, and from there just expanding higher. What bit concerned me was actually the fact that we had already a bearish SMT in play with the New York open kill zone buy side liquidity. So that was a bit concerning, because also I did not really I was not really aware of the daily buy side liquidity. I have to admit, definitely a mistake I made today. And then we also formed a SMT right here with the AM session liquidity, which we then have to target, because we can't target or expect NQ to take out the New York open kill zone buy side liquidity if we already have a bearish SMT being in play. So therefore I trade, because I only traded one contract once again due to high volatility. I traded my stop a bit too tight and got stopped right here. And in that case, it should have been below the consequent encroachment level, because I think the few more handles doesn't really hurt much if we get stopped there, but we have just really higher or way higher chances, higher probabilities that we eventually will just see one more leg to the upside, sweeping the liquidity right here, and also more importantly the daily buy side liquidity. Also trading beautifully into the high time frame gap right here. yeah, should have placed my stop below the breakaway gap, expecting one more leg to the upside into the higher time frame gap as well. Would have been really nice to catch that. Yeah, obviously we have only one contract. It's way more difficult trading on hardcore. But yeah, I really like how we reacted to the upper quadrant level of the fair gap right here, because we are displacing through a opening price level, and we are still inside the price range right here. We did not reach any specific target already. We are still expecting a upward move. I'm still expecting low resistance in here. Therefore, we expect that the gap right here will be a breakaway gap. Yeah, and for example, it's exactly the opposite for the displacement right here. Why? Because we're displacing through external liquidity, so therefore you can expect that we have a low resistance fair value gap, and that it will turn into an inversion fair value gap, and that's what we can see right here. Displace through it, and from there on, yeah, really had high resistance conditions, but definitely still managed to trade lower from there. Yeah, I really like the SMT also being in play down here. So yeah, really quality market maker buy model. I made $109 with one micro contract. I'm content with that. I would like to trade more than one contract, I have to admit, but that's basically it. So only, yeah, definitely one mistake that I that I was not really aware of the daily buy sell liquidity. Maybe trade my stop wrong, but yeah, I think we could have also just dumped through it with a candle right here. So you have to be a bit more cautious, definitely. So two bearish SMTs being in play in here, and we have such a low resistance liquidity run to the upside, then you can expect sometimes as well that we have a low resistance liquidity run to the downside as well. In that case, it's more unlikely. Why? Because we have already basically a low resistance liquidity run to the downside on the left side, and therefore a low resistance liquidity run on the right side follows shortly afterwards. So that's important, a really short time period. So therefore the region right here becomes balanced. Therefore we have balanced prices in here, and that's the reason why we have high resistance to trade lower, because we don't need to trade back to the prices right here, because we have downside or basically sell side delivery on the left side and buy side delivery on the right side. So we don't need to trade back to it, and that's the reason basically why we can expect the low resistance liquidity run to the upside, and also breakaway gaps. So that's, yeah, the point in that. I think that's basically it. Before we end it right here, I want to show you regular trading hours, because today we actually did not had a new opening range gap. So as you can see right here, 5 handles, 4.5, that's nothing. Because it's below 40, we can ignore the gap basically. Still, what I like was actually the fact that we really respected the level right here, so on the 5-minute chart, and therefore it's just more like a confirmation in that case. And yeah, I think that's basically it. I also like that we can target the still untraded new opening range gap right here, so that's really nice to see. Already traded back to CE, respecting it. We fall short of the upper quadrant level, and then basically we expanded one more higher, and perfectly actually it's way cleaner than expected today. Actually traded almost perfectly to the one level right here, which means we are we have basically closed in the inefficiency right there, and from there on we can trade lower. So that's why we met our objective right there. Really like regular trading hours. I think it's just telling you the whole story in that case. So really like that. I think I will delete this one. It's a bit irritating in that case. So yeah, I think that's basically it. Hope you enjoyed your breakdown. Hope you learned something new. And yeah, I think with that we will drop back to electronic trading hours. So that's basically it, the business. And yeah, really nice week so far. Actually forgot to turn on my camera, sorry guys. Really nice week so far. Really enjoyed the fact that they took two trades yesterday and today, and which were basically both a winner, and we stopped trading from there. We really like that, so really content with being consistent in that way. I don't know really how to manage the rest of the weeks, because as you can see right here, so today we had high impact news at 8:30, but nothing really special. Tomorrow as well, but non-farm employment change, NFP. So I think we had already some of the news already last week or something like that. Still, we have CPI on Friday, so I think maybe tomorrow is still tradable. We definitely have to avoid Thursday because it's in advance of the CPI day. So I expect really high resistance on Thursday, and eventually we can even trade after 8:30 on Friday. So really have to see how we deliver. And yeah, I think that's definitely it now. And yeah, see you soon.